Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Chicago wheat, Chicago corn, and Kansas City wheat. Chicago wheat. Since late March, possibly even mid-February, two patterns have tried to catch the mood of this market, and they have both ended up frustrating the hell out of me right now. The first was the previously mentioned mid-February to early May pink descending triangle pattern type, which we have finished with back in early May. It is not a perfect pattern by any means. However, the pink upper trend line, though previously breached, did show some merit, and the flattish pink lower trend line did hold up the market for a while, though it gave way in late April. Yet with changeover, I've been forced to rethink this once more. More on this shortly. The second pattern utilized the pink lower trend line, but instead is a smaller pattern and dates from mid-March and has a bright red upper trend line. This had a break on the downside at the end of April, but with changeover, prices have found themselves initially back within the descending triangle, and then 2 weeks ago back out again, but this time breaking higher out of it. Both are usually seen as bearish patterns, the last one especially, and I earlier gave some potential targets below for the first larger pink descending triangle. However, I've been frustrated by the attempt low, or rather the lack of it, and I've today retired both the primary and secondary targets. The key to this was the support seen by the 38.2% absolute Fibonacci line at 521. Instead, I'd watch on the top side, as indicated last week, the December 2020 low at 566, which we have breached today and are closing over, plus the flatlining mauve medium moving average currently at 560, which we have breached today and are closing over, and especially the flatlining gold long moving average currently 567, which we have breached today and we are closing over. And this is where we've got bogged down before 2 weeks ago, but it looks like we're pushing through that. Just bear in mind that beyond these we have some clear air above until the congestion at 588 and the March 21 low at 592, and even maybe potentially targets for these triangles on the top side. Overall, this is the second break from these triangles, and I have some small belief that even now, that as I've said now for 2 weeks, and I quote, having advanced so far along these patterns that we might be handed here a double bluff with now a second possible false break, this time higher. I'm not too sure about that now, but we'll see. I further said 2 weeks ago, and I quote, I'd be very cautious about this break high because of that, and maybe another week, maybe 2 weeks. So I said that 2 weeks ago. To see the strength of this move higher, so far it seems the mauve medium moving average and the gold long moving average are capping prices. End of quote. And it is changing at the moment, but I do know that if this state continues for another week, then I will downgrade both triangles and look elsewhere for inspiration. Chicago corn. 3 weeks ago I drew a mid-February to mid-April bearish Andrews pitchfork, which, whilst not being exact, as the upper time, currently at 420, has been breached on a number of occasions, most recently this week, still nevertheless showed for quite a while the bearish angle of attack of the market. I originally chose the steeper bearish Andrews pitchfork over the shallower bearish shift pitchfork, as I thought it might give a more suitable representation of the way the market was moving lower. However, and it is an important however, and I quote from last week, that being said, the time's next crossover this coming Monday the 19th of May, so watch out for one or more of the following then. A change in trend, a reinforcement of a trend, or volatility. Coincidentally, after the changeover this week, prices are now testing the 50% absolute Fibonacci line at 425, so it's worth being cautious right now. End of quote. Well, that caution was well rewarded, as on Monday the 19th we had a combined key reversal up, if only just, plus a bullish engulfing pattern and a bullish opening white Mariposa, and prices rose in the early part of last week, filling in the changeover gap, and thus fully justifying the earlier time crossover warning I'd given. This week, with the break above the upper tine, I have been inspired to fully draw the shallower bearish shift pitchfork for the same move as the bearish Andrews one, as I think we might be transitioning from the steeper Andrews to the shallower bearish shift pitchfork. That's right, now we are a little under the middle tine of the newer bearish pitchfork, currently at 441. And the next obstacle topside is the November 2020 high at 439. Meanwhile, looking below the 50% Fibonacci line at 425, absolute Fibonacci line at 425, we have the December low at 414, which ties in with the low of late November last year. Then support is fairly evenly spaced out at 409, 403, until the November 2020 low at 397, and that is just about as far as I'd like to go before I once more review the market action, should we get down that far. There is one more thing I'd like to mention, and it ties in with the earlier crossover of tines back on the 19th of May. The next crossover, indeed the last and consequently possibly the least powerful, will happen on the 24th of June. I've highlighted this with a bright little red circle just above this picture of me. Be wary then, just in case a possible change in trend, a reinforcement of a trend, and volatility, or all three happen at the same time. Kansas City wheat. Since mid-February, two major patterns have developed here, one of which is still live and a third that is no longer operational, but from which we have some echoes that resonate even today. The first pattern is a mid-February to late April sideways triangle made up from the bright pink uptrend and the bright red downtrend. It is not a great looking pattern by any means, but it nevertheless still exists, and 6 weeks ago prices pushed down below the pink lower trend line, whilst at the same time following on lower from a mid-March to early May bearish halfway hesitation pattern. The second pattern is a dark blue February to March bearish shift pitchfork, with prices still live within this pattern. 3 weeks ago we saw the market test the lower time, currently at 494, piercing it but reverting back upwards almost immediately from the previously highlighted unreconstructed December 1999, that's how old it is, December 1999 today uptrend that was nearby, currently at 504, and that was just before changeover. Over the past 3 weeks prices have pierced and started resting on top of the middle time, currently at 542, as well as the March 2024 low at 551. They pushed up as far as the March 21 low at 559 and started to get capped by the green short medium moving average, currently at 554. But this week the market started pushing up through the green short medium moving average, and we may today, apart from having a daily key reversal up, have a close over for the first time since March over that green short medium moving average. Finally, 5 weeks ago, prices broke down through the now unhighlighted lower time, currently at 550, with the significant, very shallow late August to early December 2024 bullish shift pitchfork, the one I was considering retiring. Yet these past few weeks, prices have moved back up over it once more and look like they are starting to stabilize over it. I say, going back to that first pattern again, the sideways triangle, I said 5 weeks ago, and I quote, "All this action has nevertheless still left us with some targets below for the sideways triangle pattern type. We have a primary target X in the 522 zone, not too far away, and a secondary hard to reach target X1 down in the 471 zone. I'm not too sure about these two, but for now they will do." End of quote. Well, the primary target did very nicely, but being achieved soon after my video back then, but I've chosen today to retire the harder secondary target X1, as it has recently had a figurative question mark placed over it, and frankly I couldn't be asked. It was, as I said 3 weeks ago, and I quote, "I'm still not too sure about this lower secondary target, but as I've said before, for now it will do." Well, it will, end of quote, well, it will no longer do, and I will now look elsewhere for inspiration. Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final important bit.